let's take a look at what we have on the calendar this week. And I know we had a little bit of data this morning. Ultimately, it wasn't much of a market mover, but really what we get this week to kind of cut to the chase on it is employment data. And we get a whole slew of it. It really just builds to Friday, which, this market, everything kind of builds on employment. It's kind of the eye of the storm is this consumer recovery. And so certainly employment and housing. We get a little bit of housing data this week as well. But really it's all about employment, and it all builds towards Friday, the mother of all employment reports, which we get every month, at the beginning of the month. And but to start off, we'll hit Wednesday morning. So we have a day off tomorrow. Some little data, and really what I would say for this week is you better watch stocks. Stock market's up pretty good today. It's at it's past a couple of bullish signals in terms of technicals over the last few sessions, and it's sitting on one right now. And so if it breaks that, stock market could move, and we're a bit, technically we're not overbought, but I would say psychologically we're probably overbought a little bit in bonds. And so if we get a rally in the stock market, you'd want to be on the lock side pretty quick. Rates could back up in a hurry. But not suggesting that's going to happen yet, but we sit on the precipice of that. So, but everything will be likely hinge on this employment data we get, and we'll get the first view of that Wednesday morning, 8:15. These are Eastern times. We'll get the ADP private report, and from that, a lot of analysts will start to make their suppositions about what Friday might look like. And again, that's the big report. But not to be everything's kind of employment, but not to be outshined. This 10 o'clock data point on Wednesday, ISM service sector, also a big one. Probably not one that gets floated around a lot that you know much about, but it will gauge business activity at the service level, which is the service sector. Consumer sector really is what it's trying to gauge, and that's about 2/3 of the economy. We did get the ISM manufacturing data this morning, and it was to the high side, to the plus side of 50, but weaker than expected. And just a note, what you're looking for on that, you'll notice about the ISM service sector, we have a data point there. It's expected to be at 51. Anything over 50 is showing strength in that index. But of course, 51 certainly couldn't be and shouldn't be considered strength, but that's what it's expected to come in at. And then, of course, we'll get Fed Beige Book. We've heard everything the Fed's likely going to say, but of course, this will show, by regions, by territories of Fed, how the economies are looking, and so that'll be poured through for certain. And of course, everybody will be looking for any change of verbiage or anything they can pick out that we don't know from this Beige Book. Not likely, and I wouldn't expect the Beige Book would rate high because it does have the potential to be a market mover. I wouldn't expect it to be. Really looking for Wednesday morning ADP. That'll be a market mover because they'll start to make some guesses as to what Friday will look like. Thursday, of course, every week we get the weekly jobless claims, and it came in worse than expected this past week, and we benefited from that on Thursday a little bit in rates. I think we picked up about 1/8 to 1/4 that day in the MBS markets. And so again, it's expected to come in at -20 or 475. We rate that as a highly volatile number. At 10, we'll also get factory orders and pending home sales. We would guess that pending home sales will be the data point that could cause volatility over the factory orders for sure. And again, just as a level set, anything that relates to manufacturing or factories always going to have less of an impact than anything that's related to housing or the consumer. And so we'll be looking for pending home sales data on Thursday, so it could be a market mover. And then again, it just all builds towards Friday when we get the employment report. It's expected to show a little bit of weakness with an unemployment rate that ticks up a point to 9.8 from 9.7, and loss of 20K jobs in February. Of course, anything that shows stronger employment than that would be very negative for rates. And kind of that's how we see the week setting up. We're technically some pretty tough resistance levels for mortgage pricing to get much more improved from here, unless we really get a turn in the situation in Europe, and specifically Greece, or we get some extremely negative employment data, something that would be much more negative than anticipated. And anything that comes in on the numbers or slightly better or slightly worse, frankly, and the employment report would probably only hold pricing steady where we are today. Really, the risk this week would be a backup in bonds, and we're seeing some bond strength today ahead of the stock market. But if this employment data starts to look like there's a turn, we would see rates back up really, really quickly, and the 10-year pop above 370 in no time. And so you'd want to stay nimble this week. You want to stay close to the lock button would be our suggestion, and we're going to continue to float into this as much as we can. But if we start to see a turn, you'll want to move quickly, because any turn, again, will be likely swift movement in MBS markets. On the other side, we could get some data that would support us, but again, we only see that data as supporting current pricing, and we don't get much more improved from here likely. Now, we don't have bond auctions this week, so you won't have to worry about those, but we will, of course, start those again next week, and next week we'll include the all-important 10-year note auction.